Got it. We are live on YouTube. Okay, we're on mute, so we're not double tapping there. Right, okay, let's do it. From YouTube's point of view, we have literally just started. From Zoom's point of view, you've suffered with me very patiently with technical snafus, rus.com. So thank you for your patience. And obviously we've got the hardcore crowd that is here nice and early. We're going to look at all things swinger related. Let me rephrase that. I think that's a different market entirely. Stock market related, specifically the strategy of swing trading. Nothing to do with swinging at all. Oh, quick drink. Right. Let's do it. The keg party. Yeah, the keg party started, Randy. Oh, the key party, yes, both of them. So for clarity, if you're looking for daily swings on the markets, daily, weekly, monthly, swing trade opportunity in the markets, then you are in the right place. Nothing to do with key parties or goldfish bowls we were joking about a moment ago, but nonetheless, we had a little technical snafu that we seem to have got past it. So if you are looking for that, I am a firm believer that swing trading should be simple, but like my technically challenged attempt at live streaming and doing a Zoom party, it seems to have gone all awry today. My ultimate aim with trading, whether you're working with me on a more personal level or on these free open house sessions, is to give you the right tools, rules, and software to assist you, to provide this community to support you, and to be a mentor to show you the right way. Basically, I never had anyone to ask when I first started out. That's why I'm trying to do these open house sessions every week as consistently as possible so that you can get real results. For some people, that's all this is all you need. You get everything that you need from these open house sessions. Just know that if you want to work more closely with me, you can. This is the hardest pitch I ever give. I hate doing the hard sell, so I don't do it. I don't like being on the receiving end of it, but just know that it is available if you want it. Very pleased, I think I mentioned this last week, I'm very pleased to announce, as my understanding of the markets unfolds, I'm constantly trying to refine and review the strategy. It's still the same strategy, but it just gets honed and has a little bit of spit and polish on. And we literally have a strategy family now. So we've got the classic trend, which is usually what we talk through every week with these open house sessions. Aiming to try and capture the main swing of the month in an ideal circumstance. That's what we're looking for. It is low maintenance, takes 20 to 30 minutes, 2 or 3 times a week. I always describe that as a dial that you can turn because I refer to what I do as production line trading. So you can speed things up or slow things down. And this is where the strategy family comes into effect. So you can speed it up and you can have short-term swing trading opportunities as well. And you can speed it up even further. The latest iteration of the strategy is 1 trade a day. There's a few nuances with this, but ultimately we can check for a trade, and then just check it at the end of the day. And we're either making money or we're not, as the case may be. It's very low maintenance. I've got to admit, this is the one one of the ones I'm most proud about, because it just means that you can day trade without being glued to the screen, which, as you all know, I am 100% in favor of. There's also the day trade version, capturing the main momentum move of the morning. That was accidentally all beginning with M's, but I think I'll go with it. And then we've got consolidation patterns. We've got algos and softwares and scanning systems to support all of these things. It's all validated by the algo, essentially the tools that support the strategy. We can quantify and systematize all of these things to put them into an algorithm, so we get everything validated and back tested, forward tested, as well as real-time tested by myself over the last 28 years I've been trading now. One of the things that I'm ultimately trying to do is I'm doing it for me first. And that's really what's going on. I want simplicity in my own trading. I've never liked second guessing. I never liked the that doesn't mean what you think it means. It's open to interpretation. I hated that for myself. So one of my own personal journeys is to try and remove discretion from my own trading and try and create everything so that it is essentially an algorithm. And all that is a series of if this, then that statements. And when you get them quantified enough, you can plug those rules into mathematical formula essentially and create a more robust algorithm that we can backtest. And that's what you see here. That's what you see me talk about quite regularly. At its most basic, one of the things that I do is buy the dips in an uptrend. There's a little bit more to it than that, as you can probably appreciate. This is the back of the envelope version that we have on these open house sessions. But that is essentially what I'm doing, the opposite being sell the rally in a downtrend. Again, it can be as simple as that if you choose to let it be that simple. And again, what I'm trying to do is just take it one step further and just quantify that BTFD, the buy the dip, in the context of an uptrend. So we ultimately find a dip worth buying. Quick recap of the rules, and then we'll move on to the live charts. Again, there's 3 rules to define the trend and 1 rule to find. It almost sound like it was the opening credits to Lord of the Rings there. 1 rule to rule them all, 1 ring to rule them all. We got 1 rule to get into the trade. So at its most basic, there's only 4 rules. We're looking for any of my little drawing widgets on the go. Yes, there we go. It's all ready. So we've got 1 rule to get in. Sorry, so we've got 1, 2, 3 rules to find the trend and find Bible dips. So we're looking for the average prices to cross over right here. Again, we're using the 50 and the 200 period moving average. There's nothing magical or mystical about these things. What my goal is to have a simple way of finding what I refer to as the river of money, the trend. The river of money being the institutional traders that create movements in the markets or individual stocks, commodities, forex, futures. Again, pick the thing that you're trading. It's not the little guys, despite the meme stock thing, that move the market on a regular basis. It is the big dogs, the boys and girls that move the party. So that's what I'm trying to do by using these. These are tools that they use, so I want to know what they're looking at so that I can figure out what they may or may not be doing. So it's the 50 needs to be above the 200. I'm going to use that as my, okay, the river of money is pointing upwards. Great. I want to wait for a back eddy. I'm looking for price to dip below, back below the 20 or the 50 period moving average. Oh, sorry, I skipped one. We're going to wait 20 bars, 20 days, 20 minutes, whatever the time frame you're on. I'm looking at daily charts most of the time, so swing trades. So wait, this helps us avoid false starts and whips. Sorry, I just neglected that part. But then we're going to wait for that back end again. Stick with the river metaphor. The river is going bullish, it's going up, it's going downstream, however you want to rephrase it. I'm just going to look for a little back eddy for it to come back to the 50 period moving average. That's what I'm going to call a Bible dip. At that point, I'm interested. I'm still not buying. It's when it pushes back above the moving averages that I'm interested. So it comes back to, pushes away, comes back to the 50, pushes away, comes back to, pushes away, comes back to, pushes away. And when you plug those concepts, those rules into the algorithm, then we get, we can spit out as many years of data reports. It's mechanical, it's definable. Again, this is the S&P, so it's a representation of the markets. And I can use that as my benchmark to say, if I just bought the dip, as I've just defined, in the context of a trend, as we've just defined, then we should be able to make some money. And all we can do is validate that strategy and this market on the time frame that I prefer to choose and say, does it or would it have made money? And that's what these little strategy reports are that you see me picking up over the last 20 years. Would this buy the dip, what I refer to as the classic buy the dip trading opportunity, would that have made me money? If I just carried on doing that, would it have worked? The short answer is yes. Great. Okay. Now, I'm sure everyone here is not naive enough to think that past performance is no guarantee of future performance, etc., etc. All I want to do is emulate that. Again, I'm not going to get it exactly. I think we're all smart enough to know that. But if we can just emulate it, then we should be able to make money. and it's been working for a long time. I've been doing this, as I said, for 28 years. I've been full-time since 2001. There was no Space Odyssey involved, but it's only in the last few years that I've been able to find a program. Again, I'm not a programmer. I've just got all these ideas of trading, and I've been able to sit down with them over the last couple of years and just continually refine the buy the dip methodology, quantify it, define it. Well, what is a Bible dip in the context of an uptrend? How do we mathematically quantify that? So being able to validate all of these the ways that I've been trading for, almost 3 decades now, and say, yeah, this actually works. And that's where this strategy family comes from: the classic trend, the classic trend, the short-term swing trading. We've got an algorithm to support that. We've got the intraday version of the same thing. And there's a few more nuances to all of these things, and depending on what we're trying to do and trying to achieve. But again, we've got an algorithm to support the intraday trading as well. We've got the how to trade, the main move, basically the main move of the first hour, let alone the morning, but just that momentum pop. We can basically know yesterday if there's a trade opportunity today with a day trade opportunity. Again, we've got scanning systems and methodologies that validate everything that I've just mentioned to you. And in case you're thinking it's all nonsense, again, the latest version of the strategy, which I've mentioned, is the S&P futures. Believe it or not, one of the first things that I actually traded was index futures. So a lot of these ideas have come full circle. So it's an ironic twist. I'm back to where I first started back in 1997. I was trying random side story. I was first trading FTSE futures as I'm in the UK. FTSE futures using the old teletext system. Again, bear in mind, there's no internet, there's no live feeds. If you want live data, you needed a satellite, and it was £2,000 a month. So about $2,500–3,000 a month just for a live satellite feed. That's how you get data. If you wanted real-time intraday data, it didn't exist, essentially, is the bottom line. So trying to trade off delayed data on the old teletext or CFAX. I'm not sure what the US equivalent was, but it was possible to trade futures. Anyway, so we fast forward these ideas. They hold good. So anyway, this is some trade from last week. This is the latest version of the strategy, SP futures using 60-minute charts. Again, we're looking at similar concepts. This is essentially a 24-hour market. We don't want to trade it for 24 hours. We want to be able to check in at a very specific time, check for a trade, and then check in at the end of the day. And this is the strategy and the management rule. This is last Friday. When we had the last announcement. I imagine we've just had another announcement now, haven't we? So we'll look at and see if there's a live one for us to go through in a moment. But ultimately, we're looking to capture the main trending move of the day. And it doesn't always work. I'm not going to blow wind in anyone says this is yesterday. So you will lose some money on. But as you can see, just in the last, 5-6 days, you're making more than you're losing money, which is the good news. So that's the new strategy. I will be doing a workshop on this in 1 hour. I'm doing it on Friday today at 10:30, and I'll be doing a one-day intensive at 9:30. So if you want to come along to that, I'll pop a comment in the chat box. And if you want to come along to that, you can do. If you don't, that's cool with me as well. So whatever you prefer to do. Right, so I'll be doing that later today and tomorrow. So with that said, what else have we been doing? We've got the short-term version of the swing strategy. We looked at AMD. For anyone who's been following this in real time, will have seen me been talking about the AMD trade. We've been looking at this on 60-minute charts. I do like to trade this a little bit more actively and aggressively. But we had this, again, what's not too obvious is we had this little consolidation. We looked at the breakout, we got the pullback, and one of the money-making patterns that we trade was ultimately tradable. So this is the most recent trade, again, straight down, a little bit beyond target. It left a little bit on the table with the follow through, but nonetheless, it did what I wanted it to do. And I had to take my own advice, like, why am I holding on to this? Hoping that it will do more is a futile game. I thought it would do more. I think it will get down to $60. But this particular trade, it did what I expected it to do. So I've got to answer my own questions like, why am I still in this? Take the profit, don't be an idiot, and go and enjoy your day. So these shorter term trades, they're obviously shorter term. They usually, you know, at least around about 7 to 10 days is ideal, but ultimately we're aiming for again, just a few days to be in trade. Similar principles that we've already gone through with the main swing trading version of the strategy. Again, I keep talking about, again, it gets results. What is more important that my students get results? They tell me that they get results, and we see that time and time again, and that's what's more important to me. What I'm trying to do ultimately is to avoid sitting at the desk for hours and hours and hours and hours at a time, what I refer to as zombie trading. And we've all done it, but that's the whole purpose of having a systematic approach to find, filter, and sort opportunities. It's to try and avoid the question, where's the trade? So many, and this was the question I've been trying to, certainly I was asking when I first started out. I remember sitting reading various 1,000-page tome of books. Again, bear in mind there was no internet when I started. Well, there probably was, it just wasn't accessible. Early to mid-90s. I remember, you know, vividly asking myself multiple times, how do I find a trade? How do I find a trade before it does the thing that the author's talking about? And there's so many patterns. I ended up being a pattern trader, looking for what essentially is geometric shapes in the markets. But there's always that question of like, where's the trade? Am I seeing it? Is it really there? And when you've got a systematic rule-based approach, you start saying, there's the trade. And that's the experience that I want for my own trade. There it is right there. There's that little bugger. Just like when we do, you play the game, Where's Wally? You don't want to ever say, where's Wally? Where is he? Where's that little bugger? You just want to go, there he is right there. It's a little bit of a game spoiler, but ultimately this is the market. We're in it to make money. We're in it to you know, find opportunities on a regular, daily, consistent basis. And that's what rules do for me. So that's what I'm trying to do in my own trading. And obviously you get the benefits of that and you can leverage my research. And in case you are wondering who I am, I see one or two people are finally coming in. Thank you very much. We've got some of the old hats and the new hats there joining us today. There was a little bit of a snafu with the emails, but in case you are wondering who I am with the weird voice, my name's Phil Newton. I am a trader first. I'm an educator second. I like doing what I do. But I make my living from the market. I like cake, coffee, good walks. I like spending as little time as possible trading, but at the same time getting the most benefit out of trading opportunities. Everything I do can be done within 30 to 90 minutes a day or every other day. Because that's how I want to set up my day, and it means that I can go do other things. For example, I am going to have a tribute concert later. My wife just surprised me and said, guess what we're doing, Phil? We're going to have a tribute concert. It's not the first thing that was on the top of my mind today, but nonetheless, that's where we've ended up. The bottom line is I am not a Wall Street guru. You should most definitely not listen to me and consider anything that I say financial advice. It's your money. Be responsible adults. And if you do want to seek financial advice, not from me, go and find someone else who is qualified. What I can do is give you the benefits of everything that I've looked at with regards to the market, everything that I've demonstrated over to, because again, I've cracked the code for myself. It is replicatable, and it's my students that tell me that it's replicatable. I've helped quite literally thousands of people, and I'm looking to help the next tranche of 1,000 people with my tried and tested, I think, systems. And there's not just one of those. You know, it's tried and tested systems that have helped get people like Emily results, Joe, Anik, Kyle, Colin, Randy. Hello, and Randy's here today. I'm sure he'll tell you we've got many people who get results, and they're telling me that they get them. It's not just me saying that, yeah, this is great, it works, and Phil gets his results. But even when the markets are crashing, we can see results. Just in the interest of being open about this, I've had a little bit of a dry month. It's not been the best month. We've been sat through, you may have noticed, a very deep retracement in the markets. And unfortunately, just with the way that the system works, there was very few bullish opportunities that presented. So again, just in the interest of being disclosure, it's not all sunshine and rainbows. Sometimes it's going to be dry spells in the markets. Sometimes it's going to be great times in the market. Sometimes it's going to be mixed. So we're currently seeing some mixed results at the moment. But having a multi-strategy approach certainly means that if the swing trading is not working, then the futures trading will pick up. If the futures trading is not working, then the short-term swings will pick up. So the idea is to have this multifaceted approach that in fairness is quite aggressive, but at the same time is very passive. It is parts, again, what we're going to talk about today is just one of them. The elements, my number one money-making pattern, the buy the dips, the sell the rallies, there's number two, but it is part of a larger system. We're going to focus on the mechanical elements, but long-term success is more than just the rules. It's how we monitor our performance, how we master our mindset over the market. So there is a larger system behind the more obvious, tangible rules of how to buy the dip and sell the rallies. Anyway, with that said, as I mentioned earlier, if you'd like to join me more formally, you can do. I am promoting my latest iteration of strategy, the S&P futures strategy, as I mentioned earlier. You are invited to take a look at it. Again, I'll be doing a live session in 1 hour, and tomorrow I'll be doing it as well. I can't find the little slide, just bear with me. Is it that one? There we go. I'll be running this strategy session. Quick teeth info. I'll be running this strategy session later. So if you want to join us, again, the link is in the chat, or you can go and find it on the main website, which is the ES Strategy Mentor. ES is just the symbol for the S&P futures. Right, with that said, let's go and nerd on some charts. Let me just catch up with the comments. If you've got a stock that you want us to look at, pop it in the chat box, and we can run it through the algo, see if it's worth taking a look at. I've just remembered we are live streaming on YouTube, on the YouTubes. Yeah, pop a comment, chuck a like in there if you want, or not, as the case may be. I don't see anything there. Cool. So let's get into the markets. Now, I believe there's been some news out. Jay Powell has been powwowing again, has he? Interest rates are going up. Again, what do you reckon? Half? Is it half or 0.75? Oh, quick drink. I am melting today. So plenty of fluids for me today, folks. So in case you're wondering why there's a break in the audio, I'm just trying to quickly chug some fluids. All right, let's park this full screen. 0.75, there we go. Probably not unsurprising given the secret quantitative easing that's going on with the debt repayback nonsense, which is a veiled way of printing money and buying votes. But I'll leave my political soapbox at the front door. As I'm in the UK, I don't really have a voice in this, this discussion, but I'm sure we can all agree with it. Right, so what is my usual routine? So we know the strategy. I've recapped that already. Buy the dips, sell the rallies. Right now, we're looking at the S&P futures. So the average price is there. There's the 200. There's the 50. We've got to have a bearish bias for the moment. We were looking quite literally last Friday right there. Before that, we couldn't have timed it better. Again, with the benefit of hindsight, I'm going to thump my chest a little bit. But prior to the announcement last week, we were literally saying I was finding it very difficult to be bullish on the markets. And because firstly, we're below the 200-period moving average. But one of the things that we were also looking at was the number of stocks above or below the 20-period moving average. So this is, I found it, it's built in on TradeStation. So if you've got it, there's the indicator right there. So there's the ticker symbol. So all I've done is I've overlaid this over. I've sent this workspace in the member community. So if you are in the private community, you should have had access to this. But all, if you can find it on TradingView, you can basically Google stock charts. You can Google the number of stocks that are above the 20-period moving average, and you can do it with the 50 and the 200 as well. What I am finding though with the 20-period moving average, it seems to be acting like a really good oscillator. So we've got all of these times where the number of stocks on the S&P 500 is above the 20-period moving average. What I've marked off here is the 80 and 90% level. So this is the 80% level, and we've got the 20 and 10% levels just marked off there. So right now we've got, you know, a huge number of the issues in the markets are below the 20-period moving average. And what we've seen when it's been there before, so let me just tidy the chart up a little bit, is it's very difficult to continually be bearish. So what we're expecting is a little bit of a rally. So we've got to the lows, a little bit of a rally, got to the lows, a little bit of a rally. Can we see a theme? Got to the lows, maybe not a huge rally, but nonetheless, rally, nonetheless, rally, nonetheless. Got to the extreme, seen a rally. And it could be a big rally, it could be a small rally. Again, there's no guarantee of size of movements. It's just potentially an indication of the ebbs and flows of the market movements. And so far, I've gone back over a few years to validate this idea that we looked at last week. But it does seem to be behaving in a very consistent way. So I've got to be moderately bullish for the moment for a market rally. I don't think we're going to go into a bullish uptrend, but for the same reason that we discussed last week. I mean, last week we were about here. We're about the halfway mark. You know, there was a little more than 50% of the stocks on the S&P 500 were above the 20-period moving average. And we've seen it happen before. You know, when prices just stuck in the mud, it's usually going to continue the prior move. So we had to continue to be bearish. Plus, we're below the 200-period moving average. And you know, this has been generally a good indication for market sentiment. And all that means is we could be looking at a shift in direction. So I'm liking this as a tool. I'll be including this regularly in our discussions. And this is what prompted some of my comments in the community and publicly via emails saying that we are looking at this I'm reluctant to use overs. I don't truly believe in an oversold or overbought conditions, but market sentiment is at an extreme on the bearish side. And when we've seen that previously, that's normally led to a little bit of a relief rally, for want of a better description. Again, it could be a big rally. Again, I don't think we're going to see a 20% rally like we saw last time, but we could be looking at something smaller. Maybe something like that, maybe something like that. The other possibility is we just meander sideways like it did here. So it could be a good indication. Certainly, how am I going to use this information? I've already mentioned previously, I am looking at taking profits. I am looking at lightening some of the underperformers in my portfolio. We're doing that later today as well. And I will potentially be, well, I'm not potentially, I will be looking to see if there's any more aggressive bullish opportunities on the lower time frames that can take advantage of this market movements, potentially to the upside. Again, it's no guarantee yet, but that just helps me think about what may happen over the next few days and maybe going into next week. We may see a little bit of a market rally. I am still ultimately bearish. My strategy algo has just fired off below the 50-period moving average, so I've got to be bearish from the algo's point of view. But ultimately, I'm looking for price to rally in a small way, like it did previously, and just some small rallies over a few days, which will set me up nicely for the downward movement. So again, we could see that nice bullish move for 2 or 3 days, which then rolls over, which sets up the next leg of the downward movement. And that's what I'm planning on, or how I'm planning on using this information. Anyway, just following on from last week's comments, having done some further research with this. So request from Brett, can we look at some oil futures? Just bear with me a second. So oil futures, Charlie Lima is the ticker symbol. We can also look at this on the ETF with USO. Right now, this is in a wait situation for me. So again, the 200 is there. Let me just tidy this up. I don't need that line anymore. Let's do that. So the 200 is there. The 50-period moving average is there. So right now, price is sandwiched between the 50 and the 200. Visually, it looks like a consolidation. So that's what I'm going to call that. I've not got a mechanical indication where we've got multiple crosses in our average price, but we can see that we've got multiple touches of lows, multiple touches of highs. What I'm going to do is draw a box around, say, the 100 level and the 85 level, and just wait for the breakout. Bearish breakout for the bears, on bullish breakout for the bulls. So it'd be like that since the beginning of July by the looks of it. But from the mechanical strategy point of view, Brett, if we applied no discretion whatsoever, rather than my visual interpretation of a consolidation. Again, it's sandwiched between the 50-period moving average. So, waiting for price to go above the 50 once again would make sense before considering bullish opportunities. There is the possibility that if we go below $85, we'll be looking at what I refer to in the basics training as a phase one trend. The algo doesn't look for those. It's usually quite a short-lived trade. It would typically last for 7 to 10 days on the bear side, but we could be seeing a push down to $65 if that was the case, just from the research and studies that I've done with that particular trade setup and trade opportunity. So there's an equal argument for a bullish or a bearish move. Unfortunately, Brett, there's no significant bias. The mechanical interpretation is bullish, but very close to a phase one bearish trend. So again, unfortunately, it could go either way. I'm sorry, there's no solid answer for you. And the same, or you can look for the same. I generally chart the futures because there's more data from the USO, which is the ETF, if anyone's unfamiliar. Again, that consolidation is a lot clearer on the ETF. Now, the ETF looks at an aggregate of multiple futures contracts for its construction. So that's probably making this consolidation a lot more obvious, where you've got very clear multiple touches of highs and lows, whereas the front month on the continuous futures charts, it just wasn't as clear by comparison. I would wait personally. I mean, I'm not in a hurry to look for opportunities on the futures. That said, the energy sector itself, again, I've got a lot of stocks on my watch list that might be good. You can go and look at oil drilling, oil mining, oil piping. You can go and look at nat gas stocks. You can go and look at piping stocks. Yeah, again, that would be one way of doing it. Again, the caveat with a strangle on oil, Brett, let me just go back to one. The caveat with it is that the way that I normally set it up, so if you're going to say, there's your consolidation, and if you're going to set up a strangle, normally what I do is I would buy 30 delta on the call and the put side. And that means that you can take advantage of the way that the options are priced. Usual expiration date for us, Brett. And what that means is that you will lose money on one side. Let's just assume a bullish move. So you'll lose money on the puts, but the rate of change on the puts will be slower than the positive rate of change on the call. Imagine it like you're losing money in reverse gear, but you've got 5 gears to accelerate. 3, 4, you've got 5 gears to accelerate into profits on the side that you're winning, but you're only losing money on the side that you're losing money on in reverse gear. So that would be one way of thinking about it. So that's why it works. So 30 delta is the magic ingredient there. Now the caveats is I would look for at least a 20% move. You've got to, your hypothesis for that setup is you've got to think that firstly, there is the opportunity for an explosive move, and there's the opportunity for at least a 20% move, and ideally greater if you're going to do that. Does that make sense? That's, again, very quick reminder on the back of the envelope, strategy for long strangles and how it works, and a few little geek notes thrown in there. Oh, excuse me. I'm so thirsty at the moment, so I have to excuse me. Yeah, I'm continually breaking off to have a drink. All right. Right, let me just check the chat on the YouTube. So I'm not seeing anything there. Hello, if you're watching, pop a little like, pop a comment. So what stocks you want us to look at, and we'll take it from there. All right, so that's, so what was I saying? So individual stocks, you go look at the energy sector, you go look at, what have we got? Conoco, you've got LNG. You know, this has already started to, so while the corresponding consolidation on the commodity itself is, you know, correspondingly there, individual stocks have already broken out. So I'd probably lean towards being bullish for that reason. They are booking the trend of, they are booking the trend. You go and look at LNG. Oops, what's going on? Press all the wrong buttons here. I'm on a new system, still getting used to it. So you've got SNG. I think SQM is piping, isn't it? No, I always get that confused. It's a mining one. My apologies. So you've got LNG, Halliburton, PXD. You can go look at the individual stocks. Again, there's that corresponding consolidation attempted breakout again. So if you wanted to be bullish on individual stocks to express a trading opportunity, you don't have to trade oil. You can go and find either one or several individual stocks, because the sector as a whole is still quite bullish. I think what else we've got? PXD is the other one. So PXD, you've got a lovely, again, there's that corresponding consolidation on the futures. Similar things you'll see on the individual stocks. However, the individual stocks are starting to push out. So you've got that breakout, you've got that pullback. As price turns around, I'd probably use $250 as a little line in the sand for PXD. When it pushes back above that level, that'll be the time to be, quite interested in being bullish on an individual stocks that expresses the energy sector trade. So there's several possible opportunities to place a similar or the same trade just without going direct on oil, because it's not yet breaking at all. Right, okay, so let's take a little review on some of the bullish trades and the bearish trades. So this is my top 25. One of the other things that I like to do with my trading opportunities is I'm not trying to trade everything every day all of the time. I compare this part of what I do very much like farming. Like, I don't know when, for example, Apple is going to set up a trade. Again, it's in a long-term consolidation now. And again, take my own advice, run a big box around it. I don't know when the next trade is going to set up. The only thing that I do know is that on average, it will return some good results. So the other thing that I don't know, and no one knows for that matter, is which trade is the one that's going to work. When I realized that I was still, after several years, trying to answer that question, I don't know which one's going to work. So I've got to take them all. So it's better to focus on a small list, a small group of proven winners, proven performers as per the rules that I've just described. So again, a click of a button, we can just go, does it work on Apple? Yes, it does. Great. Does it work on AMD? Yes, it does. Let's pop that in the universe of trading opportunities. Does it work on BBWI, Bath and Body Works? Yes, it does. And what you're seeing here is the performance graph over a 20-year period. And it should look like that. That's why it's in my universe. That's why it's in the top 25 more specifically. So what I'm trying to do is, firstly, validate the rules that we've just mentioned to you by the dip, sell, rise, and at its most mechanical, no discretionary interpretation of the strategy. And if I just did that without deviation, without hesitation, so that I've got repetition, would it have worked? Yes. Okay, great. So this is going to be in my universe. So all I've done is I've chosen what I consider to be my top 25. I've been through the majority of stocks that have options, that have liquidity, that have good movement in the markets. It takes a little bit of time. It's the only time-consuming part of what I do. I usually do it once a year, select a list of a watch list, if you like, a master universe. And then from that, I'm just going to take, here's my top 25. Great. I'm going to trade these for the next 12 months. Great. That's what we're going to do. I'm going to try and take every trade without deviation, without hesitation, so that I've got repetition, with the aim of emulating the performance that we see here, the historical expectation over the next 12 months. So that's, for the large part, means that I'm just farming opportunities. I'm just waiting for the setups. Like I said last month, the last month, the last 6 weeks, largely I've just been waiting. There's been very few bullish opportunities. Now, as you can see here, we've got almost an imbalance in the market. And this is not normal. We'll normally see, 60-40 splits. It'll go 60-40 bullish, 60-40 bearish. Right now it's becoming more and more imbalanced. And if you look at the names, it's mostly energy stocks that are in that bullish segment. So we've got the majority of the market is bearish. Few bullish opportunities. Again, it's just the nature of the way that things unfold at the moment. But what I can do is just farm those opportunities and wait for the setup. So let's just go and take a look at the top 25. Bullish opportunities, ABC. Everyone's resisting the urge to chant along in the background. It's easy as, say it out loud if you know the words. But we're looking for buy the dip opportunities. You've got that same type of setup. So the algo is already fired off. Price has rallied, it's retraced, it's back to its algo entry. So if I'm looking for an opportunity, I think today's the day for ABC. So if I'm looking to buy the dip in the context of a trend, this is a great candidate. So if you need something, this looks great. And there has been, as you can see here, multiple good opportunities, profitable opportunities in the last 12 months. So we've got to presume that the same leg of the movement, the same next, specifically the next leg of the movements might be similar to this one that happened last year. So I'm wondering if ABC is going to provide another good opportunity as we run into the end of this year. Anyway, let's check out all states. So all states in a consolidation still. So there's no action for me to take. All I've done is I've drawn a big box around price action. I did attempt to break out here. That obviously failed just in the interest of disclosure. But now we're back to somewhere in the middle, below 110, above 140, and I'll be looking for a breakout. For the moment, though, there is nothing for me to do. Okay, COP, is it Conoco? There we go, Conoco, yes. I don't know why, I always think Coco, ConocoPhillips. Again, it's another energy stock, isn't it? Is that right? They all blend into one eventually. Again, the algo's fired off, buy the dips, multiple opportunities, prices just dipping back to the 20-period moving average. So if you need something, there's another good opportunity. And buy the dip in the context of a trend. And just mixing in the 20-period moving average again. I know we didn't go through that in the explanation earlier, but we can look at both. Bear with me. CVX, Chevron, unsurprisingly, another energy stock, rally retracements. You know, we're above the 20, above the 50, above the 200. You've got to be bullish. If you need an opportunity, there it is right there. So again, that is, again, they're all pretty much one and the same. LNG, you're going to see something similar. Buy the dip on LNG. Again, they're all I'd say one and the same in the energy sector. This is mining. Again, another breakout opportunity. It's a little bit rough around the edges. I think it might be fair to say that we've got 1, 2 crosses in our average price. Arguably, we've got 3 and 4 almost quite close together. We could start looking at this as an angled consolidation. That'd be one way that I'd be looking at this. The other thing that you could do is, if you're not worried about drawing trend lines, you could certainly draw a big box around the messy area of the chart and say, there's the consolidation. Let's just wait for the breakouts. That would be one way of dealing with SQM, because again, it doesn't look like the best trending chart to me at the moment. Apple we've already looked at. Again, similar deal, multiple crosses on our average price. Let's just wait for the breakouts. Again, when the market's ready to get going again, I'm sure Apple will follow suit. AMAT, average price has crossed over right there. We've got to be, there we go. So average price has crossed over. Again, new algo trade has fired off. Sell the rally in a downtrend. Perfect. Unsurprisingly, lots of bearish trades at the moment. AMAT, I've already had a short-term trade on this, but the larger trade opportunity could take us down to the boundary lows, down to about $60, I reckon. Range reversal, again, we've got multiple crossing the average price. Which means that I can ignore the moving averages, for want of a better description. So I'm ignoring the moving average because we have multiple crosses in the average price. I can't call it a trend if the average prices are flipping and are flopping. So draw the boundary highs, the boundary lows, and look for those reversals off the boundary highs. Again, I took a short-term trade on this. It hit the short-term targets. The largest swing based off the daily target is at 60. Amazon, Amazon putting in a deeper retracement, big rally higher. We're at that. It's just about to go below its 50-period moving average right there. So if it goes below about 125, I'm just approximating for simplicity, goes below about 125, 50-period moving average, we could be on for a retest down to the recent lows, $102. So it could be a nice $20, $25 move to the downside on the table. Again, you notice there's nothing fancy or complicated about what I'm doing. It's like, well, where did it stop last time? Around $100. Well, it's got at least potential to get to there, and we can worry about anything else after that once it's got there. BBWI, I mean, I've had some great trades on this previously. right there. The algo's just firing off that trade. We've got a nice little rally. Need to see it go back below the 50-period moving average for any further down movement. So it's not, no, it's just not today. Waiting for it to get going. BFH. Sell the rally in a downtrend. It's just started going again. We've had some interesting trades on this previously. Multiple rallies in downtrend. Just going a little bit sideways. The algo technically has fired off, but ultimately you've got the next leg of the move has already started. So it's starting to go hopefully a little bit further, a little bit faster pretty soon. Baidu. What do you reckon? It's in a consolidation. Got multiple crosses in the average prices. They're flipping and flopping. Let's just draw a big box around the whole thing, which you can see I've already done. And it's in the middle of the consolidation. Never usually the best place to take a trade on. Wait for the breakouts, either bullish or bearish. Right now, it's not in favor. I'm going to skip over CLF. It's below. I need to remove it from my top 25. It's below that price point that I like. I like to trade stocks that are greater than $20. It's personal preference. There's nothing wrong with it. But it's below $20, so I'm just going to leave it alone for the moment. Again, just one of those personal preference things. HPQ, breakouts, pullback, got going again and is falling out of bed. Can't complain against that one. Is this an opportunity? No, the opportunity was last week. So you're waiting for the next rally in a downtrend to trade HPQ. So it's not no, it's just not yet. And if you were looking at it, which we have been for most of this year, then you would have had potentially a piece of it last week. ISRG, it's just started going again. We've had a couple of interesting trades on this. Rally retracements back below the 50, just fired off a new algo trade, waiting for a move down to get going. So it's in the early stages of its phase 3 trend, as I refer to it. But the algo trade looks at phase 3 trends. What's going on, Phil? Why don't you keep doing that? Where's that going on? Right, okay, average price has crossed over, got to be bearish, got a big rally, waiting for price to go back to the 20-period or through the 50-period moving average. This is Jeffries, JEF. Again, I'm not seeing anything to do here for the moment. MRVL, MRVL started to push lower. Again, average price has crossed over. Previous trades have already been going nicely. The algo has fired off. I'm just waiting for it to get going and go somewhere interesting. NXPI, part of the semiconductor sector. Let's try it one more time. There we go. Right, previous breakout pullback, it's pushed down nicely. It's back to previous support acting as resistance. I think we could call this a new consolidation area. So I'm less inclined to be excited about this one. We can also validate the consolidation by saying, okay, well, 1, 2, 3 consolidations in the average price in a very short space of time. Let's call it a consolidation. So I'm going to ignore the algo. I'm going to ignore the classic trend trade setup and basically draw this as a new consolidation. We'll wait for the breakouts. So that makes most sense in my mind. RNG, Ring Central, had some great trades on this as well. Continues to be a good trader. Can you believe this? Let me just pause here. It's been a weird, well, I won't say weird, a monumental sell-off. Look at this. So this was, what have we got here? Middle of early last year, 2021. $150. It's now $50. So no, so it's now 42. That's a monumental hiccup. And would imagine somebody's losing their job sometime soon if they haven't already. Anyway, the algo's already in. Sell the rally in a downtrend. Looking to sell rallies in said downtrend. SIG, Sig Jewelers. Again, new trend or early stage trend direction. You've got lovely multiple seller rally opportunities. It's just fired up again in the last few days. So again, I actually took this trade here. It didn't meet a management's trigger, so I don't personally need that one, but nonetheless, it's resuming its downward trend. 2 more to go, folks. SLG in the real estate. This has had, again, multiple trades. Previous breakout trade there, breakout pullback. The last few we've looked at on the breakout side haven't worked on some of the other stocks, but the algo's fired off again. We're at this point, sell the rally in a downtrend. And again, just waiting for it to get going and do something interesting. SPY, again, we've spoken about this. I'm actually going to skip over this because we'll come back and finish on this. And we've looked at it on the S&P futures. US Steel, again, it's on that cusp of, there's $20 right there. I normally like to trade stocks that are above $20. For the eagle-eyed amongst you, it looks very similar to CLF. It's in the same sector. And again, it's meeting that same condition, same criteria. So I'm going to have to just leave that alone. I'll need to rejiggle my top 25. Again, just a reminder, it's personal preference that I like to trade stocks that are greater than $20. And again, there's nothing wrong with them. It's just that I like stocks with a little bit of oomph. They're a little bit higher in value. And again, it's just one of those personal preference things. It shot me in the foot a few times, I'm not going to lie to you, but it does come down to it being a personal preference. So if you want to carry on trading through it, there's nothing wrong with it. It's just my own personal hang-ups. There is a top 50, but just for speed, I'll forego those. If you want to take a quick screenshot or press pause on the replay, you can watch it now. And again, I've got some more stocks that I like to trade. I like to be reasonably aggressive and usually trade a large portfolio of stocks. Let's think about some short-term weekly swings. The AMD on the 60-minute chart, again, similar setup, slightly faster payouts. We've got this touch of the 25 period. So this is going to get me back in. I posted the results earlier for the AMD trade. So that looks like it's going to set up quite literally in the next 2 or 3 minutes. No, actually, my apologies, in the next half past the hour, because the hourly bar market opens 30 minutes ago. Amazon, again, it's already fired off a trade opportunity. Apple may also give us an opportunity. Just got a brand new directional bias flipping over. So that's probably not going to be till next week. The Google trade, again, I've taken this as a range reversal, calling this a false breakout. Price breaking back into the consolidation. I'm waiting for a target of $105. But nonetheless, the algo starting to flip back over. It'll probably fire off a new trade technically. Again, it doesn't look for consolidations as such. It does require a little bit of interpretation to find the consolidation, but nonetheless, that trade's already on and open. Algo trades below around $110 for the move down to 105. So it could be a nice little $5 punt to get the last part of the move if you want to enjoy a little bit of fun there. And so as we're coming up to the top now, let's finish off on the latest version of my strategy family. Again, there's a few little nuances with this. So I'm looking at the S&P futures, and again, what I'm looking for is for a move. A move below, I'm just putting a little visual cue, move below the 50-period moving average, so around about 39.50. There's actually a few extra steps to do with the one trade a day S&P futures strategy. But broadly speaking, looking for that move down to 39.50, and then that will trigger off a nice little bearish trade to get going to the end of the day. So we've got day trade opportunities, we've got lots of swing trade opportunities. We've got a brand new short-term weekly swing opportunity on AMD, nice little live one right here. Let me just highlight that one. So I'll probably be firing that off shortly. But ultimately, it's looking like we've got some good opportunities. Right, I'm not seeing anything in the chat box. So let's think about wrapping it up. I am, as I mentioned earlier, in around about 30 minutes doing a session on the latest version of the strategy, the S&P future strategy. I'm going to be doing basically an intensive training, talking about the entries, the exits, the stop, the targets, the trade management, how to find them, when to find them, because there's a time window of opportunity. So as long as you've got 5 to 10 minutes a day, 2 or 3 times a day, then you can profit reasonably well. I'm obviously playing it down from the S&P futures trading. So all you need to do is, if you'd like to join us in the next 30 minutes, all you need to do is go to the link in the chat box. That'll take you to this page. that'll take you to this page. And what we're aiming to do is to capture the main move of the day on S&P futures. And basically, we're looking to, in the most passive possible way, using a rule-based trading system. It's very similar to what I've just described to you today, with one chart, one time frame, one setup. And again, it can be quite nice. There's no pattern day trader rule involved when you're trading futures. These days, it is also good for big accounts and small accounts. You've got something called mini micro futures. So in the S&P is usually /ES is the ticker symbol, and obviously at the expiration date. But you've also got micro S&P futures, which is 1/10 of the size of the regular S&P. So if you've got a slightly smaller account, there is something that is recently accessible to big or large accounts. And I know one or two of you are in the UK, so if you want to spread bets with this, then you can do this through spread betting. I appreciate that's a UK only thing, but nonetheless, that is a possibility depending on where you are in the world. So if you'd like to join us for that, it's going to be, I say 1 day, but we'll probably be done in 90 minutes. I'll be running it again tomorrow. So if you'd like to participate, please feel free to. Again, the next session is going to be in about 30 minutes after I've taken a suitable break, and we can get rocking and rolling. And if you'd like to join for tomorrow's session as well, you can come to every future session that we have at the same time. So just go to there, and there's a full information page of what you get and what you don't get, with some trade examples and why it's important, some historical back testing for the algorithm that we've got there. So again, if you want to read all about it, you can do. And again, feel free to join us starting in about 30 minutes. I think that's enough of a pitch. Right, so with that said, where's my goodbye slide? Right, what was your biggest takeaway today, folks? What was your biggest takeaway today? Appreciate we did more of a stock review and a quick strategy recap, but was there anything that stood out for you? What was there an aha moment? Was there a stock that made sense for you? Was there something interesting that caught your attention? So let me know what you think. I always like to try and get some feedback of where you're at. Otherwise, we'll hang our spurs up for the day and get ready for the crash course in trading futures. Awesome. Glenn, you're good. Perfect. Okay. No big revelations this week. I wasn't really doing anything other than a stock review, so that looks like it's it for everyone. Right then, just one final thing as always. I just want to thank you from the bottom of my heart. I would like to appreciate each and every one of you for showing up, turning up, spending some time with me here today. We can all be doing other things in our life. And so again, I just want to acknowledge and thank you for spending it with me here today. If there was one thing that I can wish for each and every one of you, is that you just do it. I try and give as much as I can in the shortest time I can each and every week. Yeah, just take action, go and do it. Place trades and make a change in your life, and it will happen. If you've got questions, feel free. So a quick Columbo question from Glenn. How do you get your trade station to look like mine? How different does it look, Glenn? Let me just press stop on the share because we don't need to share. Oh, actually, I pressed the wrong one.